So good morning, everyone who has joined us for our weekly webinar, or weekly broadcast, as we are now calling it, because it's a broadcast not only through Zoom, but we're live on YouTube. So welcome to those who are also joining via YouTube. So my name is David Johnson, host of this weekly broadcast, and delighted this morning that we have been able to be joined by my co-host, Mr. John Corey. So good morning, John. How are you this morning?
Fine, and how's everybody?
I'm sure they are doing well. Let's remind everyone, we don't use the chat box on this broadcast, but we do use the Q&A function. So if you have a question, if you have a comment on something that a speaker says, then please feel free to leave your comment, question in the Q&A. And John and I can pick that up and try and answer that as we go through the broadcast. So hopefully that tidies up any of the housekeeping. This is fast-paced. We've got 30 minutes. We try and get through a lot of information. We tend not to sort of deep dive on one topic because we want to kind of skim across the surface. But it is very much about education. And we've got a fantastic guest on today, Mr. Vijay Patel, and you'll hear from him just in a few moments. So the topic for today is the private rental sector. And John, we have done, I suppose as you were saying there, come up on a year of webinars and broadcasts. I don't think we've done any yet really focusing on the private rental sector.
So it depends on what you mean. If you think about PRS as in private landlords and not council-owned housing, then every session we've done has been on that. But we actually haven't talked about it, I don't think, in any way of diving into detail, diving into numbers or characteristics or attributes of the actual sector. But PRS is the private rental sector, as in not council. Yeah,
correct. And we'll deep dive in that just in a second. So first of all, before we get into our guest and our topic for today, market overview. So I got the staff to go into the latest Savills that just come out there in January, and some very interesting stats, John, but also the quotes. But in terms of high level, 2020 ended up at a 7.3% growth overall. That was the highest for 6 years in the UK. Average rent increased 1.4%. But I suppose the big question is, how much of that was artificial or manufactured by stamp duty and things like that? So I suppose the big question for 2021 is, whenever stamp duty ends and then the furlough schemes end and unemployment rises, how will that affect the 2021 market? And I suppose that's the big question.
It is a big question. An interesting contrast, I just thought of this sitting here, that in the US really doesn't have stamp duty. There's one state that has a 2% charge, but otherwise the US doesn't have stamp duty. So you don't have the influence of it, positive or negative. And I wonder if we compared US, UK, whether we'd learn anything about this temporary stamp duty stimulation in the UK versus a country that doesn't have it. What did it do in the COVID period? And I suspect what we'll see is that a lot of people are still buying because they still need a house. They may be changing homes because they now understand that they want a different style house, given that there's homeschooling, homeworking, things like that. You do see, classic in the UK, if there's a stamp duty holiday or some other adjustment, a rush to get deals done. As someone said, everybody's rushing to pay 10 or 15% more so they could save 5%. So it's interesting whether we're going to see a net impact that's going to change in the spring when stamp duty ends. I would expect it should see a taper off. It happened last time. At the same time, this conversation to extend it. So what does this all mean? Well, I think it fundamentally just means that we still have a demand for housing because we still need to house people. And people do want to get married, get divorced, have kids, kids move out. You know, the life events are still happening, which is triggering a lot of this and maybe crystallizing with the virus that, okay, why are we waiting? You never know when you might die. You never know when stuff's going to happen. What are we pausing for? Let's get on with our lives. So that's hard to read into the data, but
yeah, no, very, very much so. And we spent a lot of time last year sort of emphasizing the fact that nobody really knows what's going to happen. And I suppose the first quote I've taken there from one of the Savills articles was, had someone suggested in May 2020 that we would see 20 billion of monthly mortgage approvals by October of that year, they would have been dismissed as being mad. And yet that's what happened. The mortgage market actually did boom, towards the Q3 and Q4, relatively speaking. And again, no one was predicting that. So it just shows you circumstances can change. And I think the last quote, I know this is something that you've highlighted, given your experience in property and just given the fact that you've seen a fair bit of life. That's a nice way of saying that you're a bit older than me, but you've seen a nice bit of life. But while COVID-19 is unprecedented, recessions are not. And you've certainly been here before where there's been huge economic upheaval, and it's just one of those things.
Yes, and in the short term, you're in Northern Ireland, Brexit's having a bigger impact than COVID. And when it comes to day-to-day economic life, or maybe that's not an appropriate statement because people are staying at home and they're not going to school, they're not going to work. But there's all these overlays and all these other issues that are having impact, and human nature is to adjust. We pause, but then we adjust eventually. So maybe we're in the adjustment phase.
Yeah, no, I think so. Okay, let's get on then with our guest. If Vijay wants to come off his camera and unmute himself, that would be fantastic for us. So we every week have a session to do with real lives, real people, real property experiences. We try not to just sit and talk in theory. What we want these broadcasts to do is to bring to the attendees and to the listeners, real people who are out there actually working the property business, dealing with the challenges, trying to overcome the challenges, and sort of charting a way through. Delighted today to be able to introduce Mr. Vijay Patel. I've known Vijay, I suppose, about 8-9 months now, Vijay, I think, since we first had a Zoom call.
Yeah, hi everyone. That's correct, David.
Yeah, excellent. So initially, you're obviously very, very experienced in this private rental sector, but take a few moments and just give us your background, sort of education-wise, moving into property, and just some of the things that you've done.
Yes, my earlier life, obviously, I had a family business, which we had a chemist shops in the UK. We had about my father started 47 chemist shops, and then he sold out. And we entered into commercial investment market, and then into care homes, and subsequently I've progressed on to doing the development sector, where we were developing smaller flats and then getting into larger units, 7 to 10 units at a time. And then we entered into a student accommodation market about 7-8 years ago. Subsequently, we've acquired quite a lot of sites all over UK, from Portsmouth, Leicester, Nottingham, Liverpool, and Edinburgh. We've currently got about 4 sites in Edinburgh with the PBSA, and we have got a larger site in Sheffield where we had a planning for student accommodation and for 840 units, and we decided at that time, this was about 4 years ago, to split it into 2, and we created a PRS scheme on the site, and we managed to get a planning for 247 flats, and successfully we sold it on a forward funding basis to Grangers PLC, and we completed that scheme for them last September, finished and given them a finished product.
Excellent. Okay, so in terms of the private rental sector, so probably about the last sort of 10 years in that space now, we have obviously been doing some due diligence with you because you have a raise, which we'll talk about in a few moments, in Leicester. As part of that, and obviously I don't disclose the figure obviously on a broadcast like this, but you do have a large personal portfolio, yourself and your wife, that you've built up over the years, and you've sort of completed around about 27 projects in that time, which is a phenomenal achievement, in a 7 to 10 year period. 5 of those in Leicester, and I think what I'd like to do is deep dive a little bit into 2 projects that you did recently. So I think you built these, constructed these 2018, sold them 2019, combined to 90 North for 22 million. So you just talk us through sort of briefly that process and obviously it was a successful one.
So we got a mixture of portfolio where we've acquired an existing building and converted them into student accommodation. And Dover Street especially, it was a clean site. We bought that site about 4 years ago, which didn't have any planning, and successfully we got planning for 110 beds, and we built that 2 years ago with a local contractor. And again with Goods Corner in Edinburgh, that site was empty for 15 years. It had a listed cottage right in the middle of the site, and that's why hence none of the investors or the institution was looking to buy the site, but we took courage to buy the site with a view that we spoke to the local planners to see if we can get a demolition of the listed building and take it away and bring it back onto the site. And the planners sort of got warm to our idea. So we were the first company in all of Scotland to get a consent to demolish a listed cottage in the existing building. So we took it away, stored it, and we brought it back on the existing format. And currently, it's a students' lounge in that space. And that was completed about 2 years ago. And then we put a portfolio of about 5 assets onto the market. And 90 North bought 3 of the assets from us back in 2019.
Yeah, excellent. It's interesting you mentioned courage there. I know again that's something that John sort of mentioned over the time of knowing him, that sometimes people getting into property wonder how or what's the magic ingredient to find these sites. And it's interesting that you say there was a listed building and probably every other developer looked at it and didn't want the risk, but you had the courage to take the risk. I think sometimes that's a very, very interesting mindset that as a developer you need to have. It may have went wrong, but on this occasion it worked out okay. And that's something, John, that it's hard to teach people that, but that is a big important factor of property development.
Yeah, you do have to figure out how to mitigate that risk and look at what the worst case is. Before we jump forward, David, Vijay, could you explain PBSA? We had a question from the audience.
The PBSA is the student accommodation market. They call it PBSA, but it's technically a student accommodation.
Okay, thank you.
Yeah, purpose-built student accommodation, exactly that. Topic for today then is this whole sector of the private rented scheme. And as John said, the reality is most people are involved in this. Owner-occupier is the biggest sector. The second biggest sector in the UK is what's referred to as the private rental sector. Now, if someone really wants to deep dive into this, you can go to the House of Commons Library. You can read the whole report all about this sector and the stats and the plans and government policy. But Vijay, what was it took you into this sector as opposed to other sectors, and what was it that you saw as the opportunity in the private rental sector?
Well, the first one was the one we did in Sheffield, where we successfully got a planning consent for 247 flats, and immediately we found Grangers, who are the biggest landlords in the UK, and they liked the site, and we sort of did a forward funding deal with them, and we managed to successfully build that project for them, and they're fully occupied. As soon as we completed the building, within 3 or 4 months of occupation, they successfully rented all the flats out, and they managed to achieve between 15 to 18% more rentals than they were looking to anticipate on the side. So that their market is basically they hold the asset for 30 to 35 years. And we've done the same thing on another site in Nottingham as well, where we sold it on a forward funding basis to Rothschilds. They've got an arm in UK called Coding. And again, we did the same thing with them. We got the planning consent for the site, and we've currently building it out for them in Nottingham for 117 flats. And I'm under contract with them on another site in Leicester as well, where it's a PD scheme, and we're waiting for a planning consent to come through, and that will successfully be once we get the planning consent be sold to Coding on a forward funding basis as well.
Okay. Well, what would you say are the main challenges of this sector? What have you found like most difficult or frustrating about doing these bigger type projects in this sector?
I think PBSA is mainly basically institution-led. Most of the investment, the money that's coming in is coming in from quite a big funds and institutions, and they understand the market. They want to hold the asset for 25 to 30 years with a yield around about 5 to 6%, and manage it. And it obviously offers slightly different to a normal rental sector, where they've got quite a lot of amenity spaces on the ground floor, providing in-house laundry service and deliveries as well, and basically all the extra services that goes with it.
Okay. So in the last 2 decades, this has been the fastest growing sector, and basically doubled in that time, which is interesting. So I know, John, you've always had an interesting view of sort of how the whole private owning of houses in the UK has sort of changed really after the Second World War, and then the Thatcher era of owning your own house. The estimated retirement market, the predictions are that 33% of people that retire will actually want to rent. So it does leave sort of a nice market to keep going after for this sector.
Well, there is if you look at the data, US, UK data, which there's very different political environments, and yet the data seems to gravitate in the same way, that the high water mark for ownership is around 70%, mid 60s to 70. And the rest of that, they must be living somewhere, so they're renting. And maybe it's council, maybe it's private rental, it doesn't really matter. The point is that they are renting. And the UK has a history of being a rental country. So when the Queen took the throne, more than 70% of the country rented. So there's a very long history of most people rent, and it's only a recent phenomenon that the majority are owners. But even then, we're still talking 30, 40% of renting. So whether it's in retirement or not, it sort of doesn't matter. The point is that if you have 30, 40% renting, there shouldn't be any particular reason why that changes rapidly at retirement age. Well, the question is, though, then what type of housing do people need? What type of tenancy? Or I'm a believer in having long-term tenants, and the economics of AST and the way that the laws work, it favors shorter-term contracts. So, we're trying to rebalance. We're trying to find legislation that will allow for longer-term tenancies, but at the same time, not end up with sitting tenants, because if people don't pay the rent, you want to be able to move them on correctly, move them on so that the economics make sense. If the economics don't make sense, you won't have the money in the sector.
Mm-hmm. Yeah. Okay, so just before we move on then to the next slide, Vijay, how do you see the next sort of 3 to 5 years of this sector, and has COVID impacted it in a positive or negative way, do you think?
No, I think for the rentals, I mean, for PRS rentals, it's quite comfortable in the sense that the rental, a lot of 18s to 35-year-olds wants to stay on, and most of the institutions are looking for the tenants to stay on for 3 to 4 years. So I think on the rental market, it's quite buoyant. I mean, there was a scheme that was done recently in Leicester, which successfully rented out within like 4 weeks, and then they again are achieving rentals of 11 to 15% more than what they were anticipating. So I think for rental markets, PRS rental market is quite buoyant.
Okay. So let's get in then for this project. Let's give people an example of what we mean in a PRS scheme. This is a really, really good example of one you're doing, and it's one that was currently view deal on our project. So it's sort of a double benefit. This is Citygate House in Leicester. Vijay and his team have acquired the building you can see in the picture. Now it's actually part of a 3-phase development. There's going to be a refurb of this commercial building into 56 apartments, and then behind it there's a car park. There's planning for further units, and then a 3rd phase to actually link the 2 buildings. So this is quite a big project. But this is the 1st phase of that. So Vijay, just give us a very sort of quick idea how you find this site and what your plans are for it.
This particular site is the government-owned site. So Secretary of State released quite a few sites in the last 12, 18 months, and it was occupied by them. And they had it for about 15, 20 years. And we saw an opportunity where we could turn it into a PD scheme. So we exchanged on the site and we acquired the site with a view of creating the PD scheme and then creating 38 units on the car park. So we've been talking to the planners for last 8-9 months, and we successfully got a pre-app approval from the Leicester City Council on the car park as well. And the idea is that on the third phase that we would create 2 more floors on the existing building that will give us in total of 110 units.
Excellent. Yeah, so a nice big project. And we first started to talk about this project, I'm guessing probably 7-8 months ago when you were looking at it, and you were confident it was going to turn into a good project. So it was good to see it come to fruition. So you obviously on this project, the initial refurb of the building, you can see in the photograph, into 56 units. The planning is in place with PD. Your senior debt is in place. So you're looking to raise equity of up to 600,000 for an equity part. You as a developer are putting in around about $1 million in total into this first phase of the project. We're looking to raise 600,000 from the crowd just to bring them in on this. So you reckon, I know we've said 18 months, you're pretty confident that you'll be within the 18 months, but that's the time that you've allowed for the project?
That's correct. We've got the senior funding in place for 24 months. So we've allowed ourselves 18 months on this project to do the PD scheme, but we're confident with the local contractor we're looking to appoint that we will try and get it done within 12 to 14 months. So that gives us a leeway of another 4 months.
Yeah, excellent. Okay.
So, and just so it's clear, this is to be held for rental after it's completed?
That's correct, yes.
So there's no sales risk. You're not trying to sell individual units. So you don't have to worry about getting them sold. You can literally just open them up for rental.
No, the idea is to get the first phase built up and rented out, and then start working on the car park site, which is a light steel frame construction, and that will take another 12, 14 months, and that will be rented out as well. So the idea is to rent it all out, stabilize the rentals, and then hopefully try and sell it to an institution.
Right. Okay. So just for folks that might want to compare, what I think we're referring to here is PV, whatever is purpose built. These are built to rent, and in the US, we call multifamily residential. So large institutions love this type of asset class, but they like it only after it's rented up because that's when they know what the income stream is. So there was a question from the audience about lockdowns. Do you have any development problems, timing issues, getting the project done because of the lockdown?
Currently, we have 3 sites which are live. Leicester initially had a lockdown, second lockdown, but since then the construction side has been kicking off quite well. So I don't think so we can have any issue with that. We've got a site in Edinburgh where we're working currently within the current lockdown as well, and we've got a site in Portsmouth where we're looking to start in first week of February in the current lockdown as well. So I think currently the construction industry hasn't been affected that much in the UK.
Okay. And just so it's clear, the development finance is 24 months in duration, but you're expecting to be done way before that.
That's correct, yes. The funding we've got from the senior lenders is for 24 months, but we're looking to try and get the project finished within 12 to 14 months.
Okay, so this is offering out at a 20% per annum return on investment, an ordinary common priority share. So obviously this is equity, just making that clear. So just finishing off this bit then. So this project is view deal on our platforms. You can go to our homepage and you'll be able to click and look at all the information of Vijay and his team, look at other things that he's done. You can register and download the offer document, and you can also record your interest by leaving an email address and an amount that you think might be willing to invest in the project, and that's helpful for Vijay and us as we get ready to go live with the project. Now, we are doing a project webinar tonight. I know it's been sort of short notice, but we feel it's a really good opportunity. Vijay's diary was free. He's a very busy man, obviously running 3 sites, everything else he does. So we've squeezed in a webinar tonight, 7 p.m. Vijay and I will be running through the project in more detail. So it's a full project webinar. You can see the link on the screen, so you can screen grab that, take a quick snap of it, or it'll be on any of our social media channels. You'll be able to register for the webinar tonight, and we'll be able to get into a lot more detail tonight, Vijay, in terms of Q&A, and you'll have more opportunity to explain the whole concept behind this exciting project.
That's correct, yes.
Okay. Well, Vijay, thank you for that. You're welcome to hang about. You can go on mute if you want, and then we can say a quick goodbye at the end. If you do feel you have to go on, you can feel free. So just to wrap up then this morning, our Oak Gardens project is currently live for investment. We actually are over 50% funded. We actually less than a week where we're 50% funded with 24 investors, so a really good spread of investors. I know, John, this is a project that you've been involved in terms of the planning. I know you were quite satisfied or happy when you kind of saw the amount of investors in terms of this project.
Yeah, just I mean, Tatiana, the CEO of the company, is a client of mine, so I've been working with her in getting this raised out. And from my point of view, my personal sort of bias on this is I like to see a broad number of investors in a deal. I think it's a great opportunity for people to get to know each other through a live deal. And the amount raised in, I think, 5 or 6 days, whatever it's been since it opened, maybe it's actually now a week, because I think it opened Thursday last week, and 52,000 towards the minimum target of 100,000 is a good opening. The maximum raise is 160,000 is listed. So this is a classic development raise type process, and I think the project itself is well worth a look. If you want to just learn how this process works, just go take a look at how it's presented, all the information provided.
Yep. So minimum entry is £100, so you can jump in and use it as a learning experience and follow the project from a front row seat, if you like, and being part of it as an investor. 21% projected ROI on this. So again, you can go to our homepage, jump on, register, download the full offer document, and have a look if this is something that you'd like to invest in. Now we've got a new case study up, which we mentioned last week as well, which is again a different sector. It's in the service accommodation sector. So again, for those who are looking just to educate themselves on what's happening in the market and different ways of being involved in property, this is an outstanding case study taking you through the leasing of a property in a prime location, and then all the numbers of the refurb. Because this is obviously a live project in terms of a rental history, you can actually see the income this has actually generated. Again, John, I know you know the fundraiser behind this case study. Any quick comments on this one?
So I do want to highlight that this is a lease, and there's the option to purchase in the future. And I like to call this residential to commercial. So residential to commercial is sort of the strategic vision here, that they're running the property cash flow wise, it's service accommodation in the holiday sector. The details in the offer, technically it's not an offer because it's a case study where you couldn't invest in this if you wanted to, but you can learn from it and you can understand the developer. But the numbers show strong cash flow even during the COVID lockdown. So take a look at the EBITDA on one of the pages and you'll see how the virus has impacted the income, and yet it's still operating profitably.
Yeah. Okay, that's grand. Well worth a read. And then we also launched just this week our next project after the Leicester one, and that will be the Slade in Witcham. This is again a very, very interesting project brought by Adam Howarth, a very, very experienced property consultant, developer, fantastic CV, and we're delighted to be able to get this one onto the platform. So it's a building of 8 houses in Cambridgeshire, and again, fantastic team involved in this one. So it's coming soon, and it will be view date early next week, and you'll be able to get all the information on this one as well. So yeah, so really, really strong start to the new year, John, in terms of projects going live, projects coming in. Despite COVID, sort of construction is certainly still continuing in the UK.
Yeah, and everybody's had to adjust, and people have adjusted, and this virus is going to be with us for a while. When it comes to the short-term impact, it'll be with us forever. But the businesses that are willing to flex and deal with the reality as it is have found a way through it. And there's some examples that you just saw today.
Yeah, absolutely. So again, everyone knows if they want to reach out to myself and John, we are open to working with people individually on a consultancy basis, particularly around the equity part of the capital stack, be that preparing for a raise or looking at your numbers and deal structuring. So you can reach out to John and myself on social media. I'm more than happy to have that conversation. Obviously, we're limited to the amount of people we can take on. But where we have room, we're more than happy to engage with people and really try and help them on their property journey. So that is us for today. If Vijay is still there and wants to pop back on, any last minute comments, John, on sort of what Vijay talked about in the property rental scheme, or any last minute questions?
Well, I think the emphasis, folks, that people should take away is that Vijay and his company are building properties for forward funding. They get them ground up to finished, they get them rented up, stabilize the rental roll, and then they can sell it on to an asset manager who wants to hold it long-term, 30, 40 years, something like that. So you're literally creating value and then monetizing it by getting it rented up and sold on. And funny enough, the other deal, the case study, is almost the same thing in a very small scale. So you can do it small, you can do it large, and through crowdfunding, you can take part and watch how it all works and have your money working in that sector if you want to play in that sector without being the primary person.
Mm-hmm. Yeah, absolutely. Vijay, any last minute comments before we end today?
No, that's fine. Thank you very much, everyone.
Yeah, okay.
Thank you, Vijay.
We really appreciate you, Vijay, taking the time to come on today. Thank you very much for that. I think people have found it very interesting. So with that, we'll finish off our broadcast, and thank everyone for joining. Have a great rest of the week, and above all, stay safe. All the best.